Greetings and salutations to everyone. Hope that you had a great weekend, that you are rested, relaxed, and ready to kick off this new week of trading. We have a market that is ready for us to jump in. So we shall do just that. Let's start with Europe. European stocks slightly higher as the markets look ahead to the Fed meeting. Last reported, DAX up 0.22%, FTSE up 0.18%, CAC up 0.01%, FTSE Milano up just a little bit above DAX at 0.25%, and Stock 600 unchanged, well, 0%. The Asia market, which honestly I'm kind of surprised, was last reported all up, but it was all up. ASX 200, which is Australia. Australia was up 0.07%. The Nikkei up 2.67%, which was the most. Kospi up 0.71%. HSI, which is Hong Kong, up 0.10%. In Shanghai, up 0.99%, just under 1%. The Japan Nikkei 225 leads gains in Asian market ahead of the BOJ meeting. That is, this is going to be very interesting to see how this week plays out. Obviously, we have not, we still got about 10 more seconds, but the Russell 2K last reported up 0.40%, and the VIX currently is up slightly, 0.69%. For the pre-market, things have been pointing up. There's a bell. Things have been pointing up this morning. Dow futures up 0.18%, S&P futures up 0.76%, and the NASDAQ futures up the most, 1.24%. So we got the Fed meeting coming up, and then there's an NVIDIA conference, and that has been claiming quite a bit of attention. So let's jump into some of the other things we need to look at real quick. For today, in terms of Forex Factory calendar, the only thing that we have so far is the NAHB Housing Market Index. That's at 10 o'clock. It is a yellow folder. And for those of you who may not be aware, our folder colors is yellow is the least amount of impact. I heard it click, so that means our listener must be on.
Yes.
Yeah, ma'am. You echoing. The so at 10 o'clock, NAHB Housing Market Index. That's the only thing we have. So the folders, there's the yellow folder, orange and red. Orange is the medium impacts potentially on the market, and red is the most impact. So that's what those three folder colors are actually represented. But today, for the Forex Factory calendar, there's only just that one thing being reported. That is going to change over the next couple of days. For our investing.com, we have, again, the NAHB housing market. There's that's 10 o'clock, 1 star over here. Here they do stars ratings. On the other side, they do folder ratings. Then we have 11:30 3-month bill auction and the 6-month bill auction at 11:30, both 1 stars. All right, we've got some people who have joined us already. A Royal Diadem, good morning. Lady T, Janae, Sizzling, good morning. Marsha Dawson, Nangali, good morning. Tamar, good morning. Adrian, good morning. And Karen C, good morning. And Arlissa, good morning. You're hearing some in the background. You probably are hearing some bells going off. Over the weekend is where I put in my potential trades in my SAM account. So don't think that I'm making money because you hear them dings. It's all sim account trades that's getting entered into the market this morning on Thinkorswim. So for Adam Mancini, we have strong follow through to starting SPX on Friday. I was looking for a bounce from 50.98 to 50.21, and it hit 51.46 plus target and cleared as we return to 51.53 level. Keep holders running. Keep holding runners, which is another way of saying, at least my interpretation is, if it's green, keep it running green for a little bit. Is my interpretation. Not investment advice, but that's my interpretation. The plan today is 51 through 50, 51, 53 through 57 is the resistance. Bulls want to base below here. So 51.36, 51.24 is support. 51. So what he's really saying is that's kind of where if it breaks down, for example, that's going to be an issue. So that's where support is. But 51.69 and 51.79 to 84 is next. So essentially that 51.36, 51.24 area, 51.36 and 51.24. I'm gonna put that on the I'm gonna put that on my chart right now. 51.36, 51. Oh crap, wrong one. 51.36, 51.24. And we're gonna mark these just to make sure we are aware of what's going down with the coins. So I'm gonna do 51.24 and give it that. Say okay. Gotta get rid of this thing right here. Remove drawing. And then we're also gonna mark the start marking our 15-minute breakout. And then 51.36. So these are the things for Mancini. All right. And then we're going to go right here. Now, if you notice, for our open, we pretty much have a gap. This gapped up. Closed down here. And then gapped up right there. So we definitely have a there's definitely some space that it could possibly try to fill this week. So we definitely want to make sure that stays in the mix as we progress through the week. So this is what we've done so far. Obviously, the bell just rung, so but we'll at least put the lines there and then adjust them accordingly while we're on the call. So what we're doing here is just we're marking the first 15 minutes right now. It's only been 6, but during this 15-minute process, some people trade the breakout, the 15-minute breakout. So we're just going to keep those lines marked and adjust as we're on the call. And again, this down here is just Mancini's numbers, and these are the areas where, matter of fact, I'm even going to put the price on the right side, just so you can see. Those are the two prices that he mentioned as the support levels. So we want to keep track of those. But obviously, there's a gap that's trying to get filled right here at 51.16 up to where it is now. Nice little gap. I'm marking the 15-minute chart, but you can mark it whatever chart you use or choose to use. There's no judging on how you want to do it, but I do it with the 15. All right, so we have earnings today. There's quite a bit going on with these earnings. So what I'm going to do is I'm going to switch to so that we can zoom in. I want to be able to zoom in on it. So we'll do it this way. because I have it as my desktop, but I can't zoom in on that. So before the open today was SAIC, SAIC, Embrower. I'm probably messing up these names, but they don't give us the phonetic spelling of these, so forgive me. NIU, Exogen, One Connect. Looks like a Accure prescription reaction pharmaceuticals. After close today is Stone, the local Lantern Pharma, Freight Car, Comtech, Alpine, Bit Digital, and Inovia, NCM, and RF Industries. I can tell you that this is in the crypto space, Bit Digital. That's the one that I do recognize from that group. And then tomorrow, before the open, Xpeng, which is the car manufacturer, Tencent Music, which I believe is behind TikTok, Huya, Calorez, Corey Main. That's before open tomorrow. After close is TerraWolf Health Equity, ZTO Express, Harrow Health, Precigen, Cyclacel, and Relmada Therapeutics. Also Corvus Pharmaceuticals. I can tell you this as well, based on what I don't want to use the word researching, but I guess that's the best only word I can think of. There's a lot of companies based in China that's going to be reporting this week as well. Not just One Connect and ZTO Express, but at the end of the day, as much as China and America are pitted against each other, there's a lot of companies that are, China, like they're Chinese companies, but in some cases they'll set up an office in America and do whatever it takes to be able to list on American stock exchanges as well. So it's not just the one that you might see with some of these symbols, but there's some other ones as well. And once you start digging into it, you'll start seeing some of that stuff is like the competitor of Amazon, things of that nature. But so before open on Wednesday is Panduo Duo, which some of us probably are aware of. We got General Mills, Jinko Solar, BioNTech, which is really bio and tech, really, but Ollie's, Good Stuff Cheap, Signet, Sports Radar, Kingsoft, Orla Mining, and Mogo. Again, Mogo was another one that I believe is based in Asia. After the close on Wednesday is Micron, Chewy, KB Home, Five Below, Guess, Heartbeam, Steelcase, Lithium Argentina, Avotech, and Curiosity Stream. The other thing to be aware of, a lot of times I talk about sector ETFs because each of those sectors have a company that could be trading and its competitors in it. So it's a good way to gauge which way it's moving. This week will be a really interesting week because a lot of these companies can be either in consumer cyclical. I'm sorry, they're listed as consumer cyclical on Yahoo Finance. They could be, in terms of the sectors, they could be XLP, which is consumer staples, or XLY, which is consumer discretionary. Consumer discretionary is basically your money that you can spend, disposable income. Consumer staples will be the stuff that you need, like General Mills is cereal, Ollie's food stuff, but in terms you need draws, so Five Below is going to be a factor, but but you probably gonna need cereal first, so you won't starve. That's the concept of how I look at it. But consumer discretionary, consumer staples will be definitely two of those. That'll be a big deal. And then of course we got some tech in there and so tech will be XLK and XLV will be healthcare. So those sector ETFs you can always take a look at. For Thursday before open is Intuitive Machines, Accenture, Sundial, Academy, Sports Outdoors. Again, consumer discretionary. Darden Restaurants, which Beozun is another Chinese company, or shall I say Chinese-based. FactSet, Accenture, Lufax, Mink Therapeutics, And then Thursday after close, this is when we start seeing stuff we might more so recognize with Nike, Lululemon, FedEx, Direct Digital Holdings, which I believe is also in the crypto space, AAR, Vitru Education, Ascensus Surgical, Higher Quest, Hyperfine, and Tila Bio. So we got plenty of stuff sprinkled in a little bit of and quite a few of the markets that we normally are looking at. But I definitely feel like Thursday after market after market would be interesting just because Nike, Lululemon, and FedEx are stepping up to the plate. Friday there is nothing listed um in terms of what Earning Whispers, who puts this together, considers of note. I don't know if anything is just not scheduled on Friday, but I do know that this list that we're looking at and that we look at every week is made up of just some of all of what's being reported. So this is in no way the full list of what's being reported, but these have been picked for whatever their reasoning. Another thing to look out though for Wednesday after close is because Micron is one of the players in the semiconductor space. So that definitely will be something to keep a look at. And then KB Home, even though KB Home is technically a retailer, the fact is our numbers for something like the NAHB housing market, stuff that's going to affect housing can affect KB Home. If you think about it, if people when people are buying a new house, they want to probably furnish that house. So where are they going? They probably going to KB Home or some type of place like that. So it may not be a direct one-to-one correlation, but if the housing market when the housing markets drop, people not buying stuff to put in their crib. So some of that stuff can be maybe not a direct, like I said, it may not be a direct one-to-one correlation, but it's definitely something that I do keep an eye on. We'll look at let's real quick go back and check on our 15-minute. So we're on the 15-minute chart. If anybody has any tickers they won't look at, feel free to drop those. So far in the 15 minutes, we have not had a breakout. We still got about 15 to maybe, I would say 15 to 20 more minutes, maybe even 25 minutes for our 10 o'clock turnaround that we normally see. So there could be something happening in either direction. But since there's no major shift that seems to be scheduled in terms of earnings, there may not be a big deal happening today in terms of being huge movement in one direction or another. So we'll see though. We don't want to call it a Iron Condor day this early. So we did earnings, we did Mancini. Let's get them off the list. Our Alyssa is on the call, so she's probably gonna want to talk about the challenge. So it's on you, Alyssa.
Good morning, everybody. Hold on. Alrighty. Good morning, everybody. I am in a place where there is a little bit of noise, so I wanted to say, hey, we do have as you know, we've got our 6 week coaching coming up is open and ready for registration, if you want to call it that. Let me see. We can open my camera. There we go. It is up and ready for registration. It's going to start on April the 1st. So you want to, if you're going to get registered or you know somebody who wants to be registered for the 6 weeks, then definitely, I got a stain on my pants, didn't I? Then definitely give them the link and bring them on over to our crew. Challenge ended last week, went really, really well. Jamie, I'm not sure, did you show them the list of trades for this, trade ideas for this week? Did you already show that?
Nope.
Okay, so we got a list of trade ideas. Jamie, I'm sure we'll show it after I'm off, so we can have that for those who are looking for different ideas. That there's about 20 options there, plenty money. Don't forget, if you missed the call last night, I gave you 4 ways to benefit from Nvidia's move. And as I saw the open already, Nvidia, the first 15-minute candle is crazy, right? So how it runs all day, it may or may not. You do your own research, like I said, but I gave you 4 different ways to potentially make money off of Nvidia today, tomorrow, this week, however you want to manage it. All right. So, utilize that. If you see some opportunities, that's what we're all about, getting some opportunities. All righty. I think that's about all I wanted to say. Back to you, Jamie. Are you there? Oh, there you are.
Um, edu- educatedthetrader.com is where you can go to sign up for that. Again, that starts April 1st, which happens to be my traderversary. I started trading on April 1st, 2020, in the middle of what can be considered a tsunami of a time to get started trading. Had no clue what was going down. I'm going to pull up this list for you guys to see the trade ideas. We're gonna open this with Google Chrome. I'll put this up here. Okay, so let's be clear about what this is. This is not investment advice. Okay, it is not. What this is a list of potential option seller trade ideas, and these are designed to be these are picked out because they are affordable. These are relatively consistent, in my opinion. I didn't pick these. I'm not sure what all the sources were that a list of pulled from, but I do know that these are what I would consider to be regulars in a lot of traders trading plan in terms of what they trade if they trade for income. So they're designed, when I say affordable, I mean the spread is not a huge spread, so you should be able to trade these for the week. A lot of them are designed to be for the week. So we got General Motors, MGM, which is the studios, UAL, United Airlines, DKNG, DraftKings, Intel. I'm assuming this is Schwab here. CVS, Tesla, Amazon, Apple, and Microsoft. These are the call credit spreads. All right. So the call credit spreads, if you're not aware or familiar, these are the ones where you will be doing the making the trade above current price, call credit spread, because you are under the impression that the price will be going down or staying where it is or going down. Put credit spread is the opposite. It would be under current price to take advantage of price going up. So for put credit spreads, I see CLSK, which is Clean Spark, Hood for Robin Hoods, not Inner City, Mara, XOXL, T Triple Q, XM, which is I think it's Exxon Mobil, TSM, which is Taiwan Semiconductor, Amazon, AMD, and NVIDIA. So NVIDIA is the one that's the 5 spread. AMD is a 2.5 spread. A 5 spread, meaning the difference between these two numbers is the spread. The sell leg and the buy leg is the spread. And whatever that is, you multiply that times $100, and that lets you know what your collateral is. So in this case, you would be having a collateral of $500. This one would be $250. $250, but then like Taiwan Semiconductor is $100. So your collateral will be 100 for that, and for Exxon, it's $100, $50 for T Triple Q. So that's where we're getting our numbers from. So subtract those two numbers. That's your spread. Multiply by 100, because that's how many shares are in one contract, and that's where you get your numbers from. So this is a 0.5. That's 0.5, 50 cents, $50 collateral. And so this is a list, and a lot of us trade this list, meaning a lot of us in this community, and then I see a lot of traders just in general that are trading these. But I can tell you personally that I regularly trade, and again, I'm not advising other people do it, but I do regularly trade SEAL, SK, or Mara. These two are in the same space, so they pretty much move together. SOXL definitely on the list because that's semiconductor, and I'm team semiconductor. T Triple Q, which technically SOXL was kind of part of that anyway, because Triple Q is the tech index anyway, and so T Triple Q, because it has a lower it has a lower spread, or shall I say lower collateral amount, I like it. TSM, which is Taiwan Semiconductor, I've traded that one. We'll keep that one on my list for sure. AMD, I have not traded as much. I have made money with it before. But because it's 2.5 spread, 250, it wasn't always this high. Its success rate makes the stock price go up, and all of the other stuff. But AMD used to be like $14 a share. So this is where they are right now. So their spread, is, and the Nvidia actually wasn't always 5 spread, and these kind of fluctuate too. The closer you get to things like earnings and more volatile type events, you'll see those numbers changing, because sometimes I'll see Nvidia at a 2.5 spread as well. So the same with Apple. You see Apple that's a little bit lower, and Amazon too. So but your spread amount, that's times your spread difference, I should say, is what you want. So one spread times 100, there's your collateral, and that's what you would be risking, and or that's the overall number that we get. But this is the list. This is posted in the Telegram groups already. If you are currently not in the Telegram groups, you can always come back to this replay, hit pause, jot down whatever you want to. If you currently do not have a mechanism for screen capture, I would highly advise you and encourage you to get something, because there's always information that's happening in the traderverse that we want to make sure we can access as quickly as possible. So that's definitely one way to do it. And I will say, I think it's Firefox has a very good one that's really easy, and Microsoft Edge does too. So there's that. So this is our list. We will be pulling. Many of us will be pulling from these this week. So always keep your pen and paper handy for some good stuff. And again, please do not just look at that list and go and trade it. Please look at the list and then check the chart first, because we pull these numbers on the weekend, and or we view the numbers on the weekend, and then the market opens. Those numbers are going to more than likely change before we get in. So as of right now, the 15-minute breakout has not occurred. It has not broken out quite yet. So we are still in watch mode. But this was a very interesting candle drop. But again, it happened after the gap up. We have a couple tickers, and let's take a look at the tickers. So let's do Adobe first. and Adobe is has been kind of flipping around with the stock price lately, because it is in that AI space, and Microsoft is doing some things with AI and graphics and things of that nature. So there's a lot happening with Adobe. So this was the gap down, a recent gap down of Adobe, but let me show you what's going on the monthly chart first, because that's bigger set of numbers and more concentrated data. So let's take a look at that, because overall, it is still, Adobe is still on an uptrend. Okay. I mean, even if you go, I don't even gotta go back that far. Even if I go from here to here, it's still on the uptrend. Okay. This recent what's happening recently to me is a pullback. I'm not saying that, I don't know obviously how far it'll pull back, but I am saying that on the overall, in the grand scheme of things, if you're counting from last October, actually no, this is more than last October. This is October 22. So even let's go a little bit closer to May of 23. We're still on the uptrend, but it looks like is trying to pull back. So I'm making that distinction because sometimes people might take a all is lost type mentality with some of these pullback. This may be a strong pullback. We don't know, but I can tell you that this level where it's at on the monthly chart, 501, to me, that's the area that would be watching to see what's going to happen, because it has turned around here before, and then you have activity right here as well. So as of recently, we do have that gap down, but in terms of the past year ish, and in terms of all-time high type numbers, obviously it's still overall down, but the most recent numbers, it's on a overall upswing, but I just think it's in a pullback mode right now. So when we go back to the daily, and I only point that out because sometimes these numbers, if we're not aware of what's happening in the higher charts or previous previous times to visit it, sometimes it might put us in a situation where we're thinking one thing is happening. At least I'll say I've been in a situation where I thought one thing was happening, but I wasn't looking at the overall flow of how things were moving. This is I'm gonna blow this up a little bit. So this is the daily chart. I've switched to the daily chart. And what I'm going to do with this is I'm going to put this leg in. There's multiple ways you can chart this. I should be stating it that way. There's multiple ways you can chart this. I'm going to show you the 3 ways that I see that you can chart it. I personally don't consider any of these ways to be wrong. I'm just letting you know what I see. One way to chart this would be leg in. So this will be the leg in because there's a gap down here. 3 candles in the base. And then this leg out, which is a gap down. Okay. That means sellers pushed this down and created all of this space. Obviously, at some point, it's going to try to, I shouldn't say obviously, but at some point we would expect that it's going to try to come back and fill that. But this formation that I have right now is currently taking advantage of this long leg out. So that's a strong leg out. Okay. So that's the first one. Leg in, 3 in the base, leg out. The other way to do it is use this one as the leg in. So now you do have a leg in. You got 1 in the base, but your leg out is the small one. All right. So now you got a smaller leg out because we're not taking advantage of that gap down. Again, if it is a formation. And if you do formations and have in terms of having 3 parts to it, or leg in and the leg out, that is what it's doing. So that's the second way to do it. Longer leg in for this formation, small base, leg out. Other version would be you bring this down a little bit, and this is the leg in. So there's 1 leg in, It's a small leg in, technically speaking, depending on how you view these type of candles, but leg in, 2 in the base, leg out is a strong push down for your leg out. Me personally, I'm going with this one because even though it's a smaller leg in, I'm still taking advantage of this leg out. And we can, to be honest with you can do either one of them, but I actually like this one a little bit more just because it's a little less risk by moving this line up. But I would have no problem with doing it that way as well. Honestly, some of that interpretation may stem from the version of the source in which you started learning your technical analysis. Some of that could be behind it as well. Some people are taught to have just a strong leg in and a strong leg out. Some people are being taught that it, as long as it has your formation has certain components, the general idea is to understand where the buyer and the sellers are regardless. So for me, I'll probably will do this one. I will say the strongest formation here would probably be this one. And when I say strongest, I just mean there's a strong leg in and a strong leg out on both sides. There's 3 in the base here, but yeah. So I will be looking at it from that point of view in terms of the sell zone. In terms of the buyer zone, it fell into a zone that I'm pretty sure is going to end up being the buyer zone. So I'm going to mark it. I'm going to mark this here just to put the lines in, but I'm pretty sure it fell into a buyer zone or something close to it over here. Okay. So there's a couple things. So that would be considered a revisit right there. So what I will be doing on this one is I would do 2 in the base on this. I wouldn't mind doing it this way. So this is the leg. Well, the way I would do it is leg in. I would do 2 in the base and a leg out. And the reason why is just because if I pull it down here, this leg out to me is not as strong of a leg out as this one. This is a standard formation, again, depending on where you started. But if your standard formation is 3 candles, a leg in, base, leg out, this does meet that. I do not have a problem with adding a little bit more risk and going there. It's a smaller leg in. I personally like the smaller leg out. 485, 475. And the only reason in this case I would either not use this. I guess if you can come down here if you want less risk. There's nothing wrong. Again, there's nothing wrong with any of these in my opinion. You can use this one, but if I was going to be down here, I probably would be considering this one down here and go leg in, base, leg out, and be okay with that one revisit because I know there's not another revisit down here. So it fell into that, it's in that area. As a matter of fact, I'll do it this way. Let me do it this way. Where is, did I lose my place? Let me see. So what we're going to do, I'm going to move this up, move this over, and okay. So what we'll do, I'm going to take this line and I'm going to duplicate it and we're going to change the color a little bit. And then we'll just make it so that we can see the differences between the lines so that we can have both of those zones charted. Yeah, I'll do it's closer, so I'll use that. All right. So the dotted line is for this formation, and then the solid line is for this formation. So you got two. And again, if you wanted to do it this way, you would be adding more risk to it because there's more space in between here. But all this would mean was that when price came down, you would be watching it to see if it comes down into this zone, it comes back out. When it's down here, when you're watching it, it just means that it has traveled down. It has a smaller width right here in terms of where you're watching it to see where it dips for this dotted line. But when you move over here, neither one of those have touched that line yet. And if you're wondering, for $484, if you pull back to here, so $484. So remember earlier when I was like, well, I wouldn't mind taking advantage of this leg out. So this would look like a smaller leg out because of where the line is. But what I do like about this is if I go over here, even though I've added risk, this is where it bounced. The spot that I put the line at is where price bounced and went up. So I know that there's still buyers there regardless. All right. So when I looked at that line and thought, oh, well, I could put two in the base. I just want to take advantage of this leg out. I didn't know whether or not it had been revisited yet, and had been in that area. And actually, it probably is considered one revisit because this should be a little bit higher. But leg in, two in the base, leg out, strong leg out. But that's where it bounced out of. It's right here. Right. So if I'm watching Adobe, I know that there's some buyers down here. And I also know that at some point it should be trying to fill that gap. If that does not make sense, please put it in the chat because I am looking in the chat box. But that's what I have for Adobe. I might be more than what you bargained for, but yeah. Okay. So what this would mean for me for Adobe's price is that it's kind of sandwiched right now in between a gap above it and a support, a couple support zones under here. So shoot, I might take a peek at Adobe. Adobe is also going to be in the XLK for the sector ETFs. You'll see Adobe will be one of the companies that's over there. All right. And then somebody requested in the video. You're welcome, Janae. Can't believe Janae is giving me a compliment. Oh my goodness. She's saying thank you. Oh, Lord, Janae. She the one that told me I talk a lot and don't listen enough. So we got we got NVIDIA, and as you can see, NVIDIA has been on a tremendous run up. They have become as you know, a juggernaut. Juggernaut is the best word. The only problem with NVIDIA right now that I would say, and this is the monthly chart that I'm looking at right now. The monthly chart is saying that technically speaking, it has not found a sell zone with a formation in it, but we know at the very least that this high point, the high for this is 974. So we know there's got to be at least a strong seller up there in order to be able to turn this around. The thing with NVIDIA, some people were making it seem like NVIDIA was about to go on a bear run and price was going to start dropping. I felt more like the way these big candles have been running up. I was thinking, well, at some point, somebody's going to want to take profit. I mean, if you've been holding on to NVIDIA, you know, even if you was holding on to NVIDIA down here at 400, you done doubled your money. At some point, somebody going to want to take some profit. before Nvidia decides, if they ever decide to do a stock split or something, I would imagine that people want to take profit, where they can. So I don't think it's time to panic like going back to, pandemic conditions, in other words. So that's just my take on it. But they're on a run up. The only problem with these run-ups, problem is in quotations, but the only situation I'll say with some of these run-ups is that you can't find a seller zone to chart a lot of times. And so that's what I was saying with was like, yeah, it's great that it's running up, but this is at all-time highs right now. So you might not have sometimes you may not have a complete buyer zone. What it looks like for this right now, for example, this particular formation right here happens to be the highest formation if you're just judging strictly by the candles. Okay, so this would be charted something like this, right? And that's assuming that you come from that school of thought: small leg in, one in the base, leg out. Okay, but here's the thing: this formation, though, even though it has three components, a lot of people wouldn't consider this your standard formation because this base candle is not higher up. All right, because it hasn't moved higher up. It's not higher up in this process. And so this doesn't look like any of the other candles, at least with these candles down here. You got three, they're all in alignment. There's a clear distinction that this is the leg in, these are the base, this is the leg out. With this one, it's kind of sitting in the middle of this next candle. So in terms of a formation, in terms of a signal, it might tell you something, but in terms of a formation, many times that's not like a strong enough formation to be considered a seller zone. Some people will chart it that way. Some people will just mark it and say, well, I don't consider it a zone necessarily, but I do see that something is happening. So some people might just mark it and just go, let me do activate. Some people might mark it this way or put it on the base here, but let's say if they put it here and then they just know, okay, this is a turnaround point. So that's something to be mindful of. Because today's candle is still forming, I won't consider it a complete formation. But what I will do is say, and I'm only charting it this way because today is still forming. And so for my trading plan, I don't consider this next candle done because I don't know what it's going to do. So if I need at least 3 candles for a formation, and this one isn't complete yet, it doesn't even make sense for me to even mess with it. So as of right now, I got leg in, base, leg out. Okay, so I have a nice strong formation here, and that's what I will be using as my buyer zone. As far as I'm concerned, without doing anything advanced, because you will always hear people use phrases like advanced formations. Without doing anything advanced, I feel like we don't have a sell zone yet in order to make that decision. Depending on what happens with this candle for today, then I will probably move this line up here. Let's assume that it doesn't come back down or something like that and drop all the way down. I would be saying leg in, base, and this gap up is a nice strong leg out because buyers push that up like that. Okay, so until I see what's going on with that final candle for today, what that final look of that is, I'll put this here. But the other thing to keep in mind is that there's also under this a gap, and gap can be support and it can be resistance, right? So we got a gap that's sitting right up under this support zone anyway. And to be honest with you, what some people would do, and I know it because I've been a part of the environment, what some people would do is just consider all of this, like even though we're charting leg in, base, leg out, some people would consider this neighboring candle as part of the zone, right? So they would just include it like this because it's a neighboring candle and these prices are zones. And so it really would be all of this, the main thing you would be counting in terms of your charting and your dollars would probably be this, but there's also that gap that's happening right there. So there's definitely multiple ways to chart that. I personally, for right now, just I like this one. I'm fine with this one. But you can definitely see that there's multiple ways to chart it. But I do consider this to be a strong zone. But I'll just wait to see what happens here. Again, I don't mess with the people do advanced formations, and I don't knock them. I don't even when some, just to be clear, when I say advanced formations, well, some people will basically do things like obviously there's price action in this wick. So they might go into this wick, let's say highlight this wick. We'll do something like that. Highlight this wick, go into a lower time frame. I'm not even sure how they choose the time frame, but let's say we'll look at 4 hour and see if there's a formation. Well, as you can see right now, at least on the 4 hour, technically there's a couple formations on the first 4 hour. There's this happening right above this, but to stick to the point. So if we were doing this on the 4 hour, we will be using these lines. And this is why it's advanced. And again, I'm just letting you know what I've seen. It may be, people might call it advanced. Everybody got their names for it, but by going into the 4 hour chart now, you see that this is a strong, this leg in, 2 in the base, leg out. That's a strong leg out on a 4 hour chart. Okay. So if we were to go back to the daily, now you see that where I had that square is what ends up being the seller zone. So all I did was put a square on that area, right? It went into a lower time frame, which is 4 hour. I guess you could choose, I guess, whatever time frame you want, but I just went down to the next one down that would be the strongest and found a formation, and then it ended up being one that would be the sell zone. And then if if I wanted to, I could use these numbers as my buyers on the sell zone. That's my understanding of how that works. But I will say this, because NVIDIA, so I hope that makes sense. Who was that asked for that? Michelle Roberts. Does that make sense, Michelle Roberts? I hope that you had got some clarity when it came to NVIDIA, because there might have been a lot to put on there, but so yes, there's room in here for it to go up or go down. So that's why I'll be waiting on that. Again, the last thing I'll say about NVIDIA is that because it's on this run up, I see a lot of people who will do like a call credit spread, for example, on NVIDIA. And I'm like, if you're doing a call credit spread, you're assuming that this is not going to continue to go up. So I would say NVIDIA is one that you definitely have to, that's not a set it and forget it type situation. In my trading plan, it's not. because what will happen with NVIDIA is there are other things that are impacting NVIDIA. It's not just, they used to be just about graphics cards mostly. And now because of the AI space, there's always something happening with, you know, with AI that's impacting NVIDIA that could also, if somebody comes out with a quote unquote better chip, that's going to affect NVIDIA's price. So I would say if you're going to talk about you want to short NVIDIA and assuming the price is going to drop, you better keep your eye on the news. You know what I'm saying? And I'm not speaking specifically to Michelle Roberts. I'm speaking to mistakes I've made in the past trading NVIDIA. So when I say you, I'm saying the general you, not just, you know, a person. I'm using it as a general term. But I done got burned doing that because it would look like it was, you know, going to be heading down, and I'm just using this area as an example, but I would be like in a do a put or something like that, not realizing, you know, this thing is going to start pushing up at some point. So yeah, I would definitely be watching that, and I would definitely be planning on getting out of there. I would feel more comfortable if you're doing calls. Let me say it that way. If I was doing calls, yeah, man, I'm more likely to do either calls or do put credit spreads. Whenever I do NVIDIA now, I'm looking at a put credit spread from doing verticals, because buying calls is not cheap. I want to swing back to SPX. Thank you to everybody who's hanging out. And I am Jamie Irvin. I am part of the Educator to Trader community. Alyssa is the head coach. I'm filling in. I fill in on Mondays and Wednesdays as she continues to keep math professoring at her at the university. So what we got is, whoops, I got this on month. I'm trying to go 15 minutes. So for all of our breakout people, what we have here is a failure to communicate. What we have here is a tiny bit of a breakout. Okay. I'm going to add this line to my chart. And what this line is just to let me know that on the 15-minute chart, this is what the next level going up is. It's got to pass this. It's got to pass this. In your case, you might not want to do lines, put lines on the chart. Maybe you want to do alerts. And I'm not speaking to anybody specifically, but I'm just speaking out loud, I guess you could say. But these are the next two levels I see. So as I sit here now, I'm just waiting to see whether or not this is going to hit this and retrace, or hit this and go right through it. And just wait to see what happens. But so far, for the past 40, almost 45 minutes, it looked like it's trying to, at the very least, head in an upward direction. So I'll be watching that. I would highly encourage you to use alerts if you can. And these, I know that Thinkorswim, if you create an alert, you can get it to email you. Matter of fact, since we're on this call and this can be replayed, let me show you. So if you're on the desktop, I don't know how it works for the other devices, but if you do create alert, you got SPX. I just leave it at stock. Then I put what I want at or above. You can say if the mark, which let's say current price, is at or below a certain amount, or at or above a certain amount. In case if I said at or above this particular number, which is now is way above it, so that's good. You can go here, notify with, And you can choose play bell, you can choose send an email to a specified address, push notifications to mobile devices. So you can input that information. And then if I recall right, I'm trying to remember when I think it sends it to the email address that you have on file, whatever it is, a normal email address they email you to. I believe that's how mine went, because I don't remember having to type it in all over again. But I just came in here and choose those settings and hit create. And now, so if you don't like a bunch of lines on your chart, now you have this alert here. So in my case, if it comes up here, hits that, it'll send me an email. And most of us have email, our email address is connected to our mobile devices anyway. So that's one way of being able to have access to what's happening without having to put a bunch of lines on your chart. So there you go. All right. It was a bit over my head, but thanks. What I got is that we do not know what is going to do yet, so wait for another kind of the form. That's how I would, that's how I would do it. Wait for another kind of the form. We talk about NVIDIA. Yeah, that's the gist. And you can literally, you can always come back and take a look at that. I like NVIDIA because it's going to be consistent because of their major player. So it's definitely something that I always look at to trade. Getting to know the stock though takes time, how it moves and things of that nature. And that's what I'm working on with a lot of these tech stocks. So anyway, I will not hold you hostage any further. Let's look at, so we got this list. This list, again, you can always come back here for this week and look at this screen capture or whatever, whatever you want to do, and add that to your list for the week as stuff that you can take a look at. We're going to go over here, the US. The VIX, I want to look at the VIX. The VIX is down 0.28%. It is now at $14.37. Generally speaking, if you're not aware, the going thought is when the VIX is going down, the VIX is considered the fear factor. And when the VIX is going down, many times you'll see the big three, Dow Jones, Industrial Average, S&P 500, and NASDAQ may be trending up. And so the higher the higher that the VIX is, so when the VIX is going up, these might be going down. When the VIX is going down, these might be going up. And so right now, since the VIX is going down, I'm not surprised to see that there seems to be movement that's in an upward direction. That's a very general statement, but I've seen that to be, I would say, mostly true. So I like to check the VIX to see what's going on before I get into a trade. So since the VIX is trending down, for this breakout, just I would think that this breakout may not, quote unquote, may not come dropping all the way back down and fill this gap today. It may, but I'll be thinking since the VIX is down and the general market seems to be slowly moving up versus quickly moving down, I'll be watching this to see what goes down. So that's just my take on that. All right. We got our E2T. I think we got all the tickers that people asked for. E2T daily declaration. That is here. By faith, I'm a successful trader. I'm a wise and knowledgeable trader. I make smart and lucrative decisions for my portfolios. Money likes me because money is comfortable around me. It is drawn to me. If you found any value in today's broadcast, please click like. We'd appreciate that. If you enjoy getting the morning information, definitely subscribe and get alerts. Again, the Options 411 6 weeks live options coaching Starts April 1st. You can register at educatortotrader.com. That's educatortotrader.com. You will learn about opening accounts, navigating platforms, understanding trading lingo, learning charting, which is technical analysis, selling strategies, and how to create your trading plan. Okay? We're going to let go of the guesswork, embrace expert guidance for options trading mastery. That is by Alyssa Pinkleton. Our E2T Daily Prayer. Lord, give us wisdom and knowledge for our trades today. Help us to make smart and lucrative decisions for our portfolios. All right, everybody. Appreciate you hanging out. Thank you for giving your feedback in the chat box and in the Telegram group. And we are going to bid you adieu. All right. In this community, we make it a daily goal to stay green and get this money. And we hope that you will be a part of the winning trades today crew as well. You all have a great day. Stay green, and we will talk to you later. Y'all have a good one.